There we go. Sorry about that. Got the YouTube going. Meta is green. Yep. Apple's definitely green. Tesla has recovered and gone green. CL just posted data. They're still downtrending off of 73.5, coming back over to 72. There you go. Wait, I think that's the right one. Let me make sure that's the right one. Yeah, it's the right one. You're welcome. Okay, zooming out to the longer time frame, 30-minute. That's the part that gets you discouraged, because as fun as it is to play bottom wick, bottom wick, bottom wick, is that every bottom wick, it fails to get us out of this range. So we're looking to get out of here just so we can have some sort of trend to play, some sort of volatility, some sort of true direction. But instead, all it is just more grinder action. Large sweeping red, bottom wick it back up, and now right into the middle of the zone here. And they're going to get you so skeptical to play any other position, and then eventually they'll move it. Bank capital levels are appropriate. Monetary rules are only the starting point. There you go. $60.60 still going higher on ES. So far we're looking at a 40-point recovery. They've officially hit 50% mark for the second time, which usually means full V recovery. Once you take out the 50% mark the second time, you're going. So unfortunately, the same old crap we've been dealing with. Watch. In attempting to try to blow up the prop account, I'm instead going to make more profit than I ever have. This is ridiculous. That's how it works, isn't it? That's how it works. Forget everything I've said. Stop using small position sizes. Max out everything. Full position sizing, max it. Ridiculous. I'm just kidding. Here we go. Here we go. Holy smokes. Holy smokes. This is stupid. This is stupid. 60.75. NASDAQ is 740. Oh, don't top wick me now. I'm just getting on board. Come on, man. Come on, baby. If NASDAQ can get over 790, then we're definitely going to fly. 790 is the highest volume profile node here, above the POC. So 790 is a high value high. If it takes out 790, 21,790, then it's going to be a major gabagoo candle. We'll see. Your guess is as good as mine at this point. I don't know how many times in a row they could reject in bottom wick in a 1 month period before we finally break. So they did just fill 1,000 iceberg, which is a sell side iceberg. So, but then again, every single sell signal the past 2 weeks has been blown through in bottom wick, so it probably means nothing. But 60, 66, 67 here. 1,000 sell ice just filled, and we still have. Well, now they're buying calls and selling puts, so maybe. Make sure you don't break any of the new 100 rules on Top Step. Yeah. Yeah, I probably will. They won't pay me out. Their new rule, they won't pay me out. $21,790. That is your line in the sand for buyers. If they clear that, it's going to get bullish, especially after the liquidity grab from the CPI. So until then, just ride it up, do the same old thing. Definitely, the algorithms are definitely on your side if you're bullish. So you should make a video on how a market adapts against strategies with time. Yeah, I could. I'll add it to the list. and really, the whole 90% of the conversation is about identifying market changes, is looking at the daily, weekly, monthly charts. If you're not putting in the pre-market time to prep on the daily, weekly, monthly, then you're failing yourself. And I don't see how anyone can be profitable by not putting in that legwork in pre-market. It's like now. The reason why I'm kind of having fun with this, we're kind of joking around a lot, is because I'm not playing that much. Because I hate this price action because of what I'm seeing on the daily, weekly, monthly. The weekly and the monthly chart has been screaming. I posted it on my X account 3 weeks now. It's been some of the worst price action since 2018 on the monthly chart. NASDAQ is just dead flat now. So, of course, I'm not going to look to sling massive position sizing and try to play these huge moves, because it's just not happening on the macro scale, and it requires selling climax to get us down. So if the market is going to drop, unless you just have uncanny timing and you happen to short on the day that we have the selling climax, that the market is not going to start breaking down into the markdown phase until you have that selling climax from after the distribution. Because the market goes from distribution, selling climax, into markdown, and then the market enters a markdown phase. Obviously, we haven't hit that yet. So you can't really, in good faith, play the big sweeping downside until you have that, unless you're just playing a preliminary speculative short with small position sizing, which I don't really like doing. Sometimes I'll kind of participate in that stuff, but most of the time, no. And right now, what the algorithms are telling me is we are going to use every red move for liquidity higher. So you play that until it changes, and that's what the daily, weekly, month is telling me right now. And that's pretty much how the YouTube video would go. But I'd love to make one, yeah. Powell says the Fed thought inflation was transitory in 2021. Yep. But know your strengths, too. You have to know your strengths. The market never believed them in 2021. No, absolutely not. $721. All right, let's see how this plays out. We just filled top liquidity with 1,000 sell side. NASDAQ is 21,721. Still going green, though. You're welcome, Adam. Good stuff, buddy. Good stuff. We have a green CVD NASDAQ 1600, still climbing. ES has a 10,400 CVD green. Got a little cat coming on here lower, but no signs of pullback just yet. Still going. What are the new top step rules? There was a whole bunch of them. Basically, their intent with the rules, at least what their public intent is to stop all the shenanigans. People flipping accounts and, signing up multiple different names. But in my opinion, it's just blurring the line to give them the ability to start denying payouts to large traders. That's my opinion. Where they can kind of just blanket put out there, sorry, we're going to not pay this. Go pound sand. Either way, though, it just once again reaffirms the fact that prop firms are businesses. They're not there to help you. They're not there for your friend. They're there to take your money because that's what they're there for. They're businesses. So if they were truly for the trader, they would say, no rules. Here's an account. Go trade. If you make money, I'll pay you. If not, thanks for the free set fee. Trading is hard enough without having to put rules on people. So you want to give them leverage, it's your fault. What are prop firms? The retail prop firm we're talking about now is a company you could sign up for a nominal fee, and they give you the ability to trade on a simulated account to acquire a target of profit. And then once you make that target profit, they put you in what's called a live account, quote unquote, at which point you can still trade simulated funds to accumulate simulated profits, at which point they will pay you as a 1099 employee, which is taxable on your own personal W-2 rate. $60.61 on our way into the $60.75 realm. No more blank checks for CFPB. All right, so we came up to 21,800 here. Top wick back over. Didn't quite get the target of the 21,790. The 21,790 is your level to claim before liquidity breakout, and they're rejecting it back over. This was also the 15-minute POC back over. So we'll see what happens here. Just waiting for a good outlier move, if any, at some point. I'm of the opinion now, me personally, my personal strategy right now is to kind of hoard assets and wait for the big move. I want to be ready. So I'll get a couple of licks in here and there, play this back and forth, buy the dips, sell the rip type of thing. But I'm just really waiting for an outlier move. And that requires volume, unfortunately. And I don't know when that'll be. I do know one thing, though. February-March timeframe is usually a fantastic time to trade, more specifically the mid to end of March, which is the end of Q1. So that's the time to start shaking and baking, because we have the asset reallocation going into end of Q1 into Q2, into the summer, the boring summer months, which is, mid-June-ish, July, and then into August. Now, July-August, the end of July-August kicks off, historically, is somewhat of a bearish season, at least in the modern era. A lot of selling occurs between July, August. So we'll see if that occurs. But we have that pressure coming into end of Q1, and then the bullishness that usually responds after that into the summer, and then end of July, early August timeframe, maybe even September, is when the pressure comes. So right now, I'm just kind of waiting to get out of this back and forth action and start playing some decent positions. I'll still continue to tranche into TLT. I'll still continue to play these lows and highs, but overall, we're just kind of stuck, letting the high-frequency traders battle it out. Now, one thing of interest to look at is that, the great thing about Bookmap and order flow is that you can monitor any outlier data. We haven't had any for a while. However, recently, we see this cat starting to come on the books. Now, it's small. It's not huge. Where's he at? There he is. But he added some today, actually. 5,500 is on the books. Now, Bookmap has an uncanny ability to kind of forecast this stuff through this liquidity posting at outlier areas. 5,500, 5,510. We're sitting at about 300 orders now. This 99 one is new. That came on today. So keep an eye on that. Keep an eye on that. Now, it's very small. That's why I'm not really pounding the table on it. If that was, 1,500, 2,000 orders, that'd be something a little more obvious. But right now, it's just kind of small. Do you think March tariffs will have an impact? I think tariffs will have an impact to some degree. I don't know what that impact's going to be. I'm still trying to sort through the difference between fact and opinion out there. Obviously, it's a very charged conversation. It's hard to say what will actually happen. Powell says he is concerned about Treasury liquidity. That is fantastic. All right, bottom wick back up. There you go. But overall, just more back and forth as we get into the higher nodes of the volume profile. So if you look at it, the volume profile, another bottom wick, 790 is my target to start squeezing. That's the squeeze level that if we reclaim, we're in danger of a squeeze. Right now, we're just undoing some liquidity from CPI. So once we clear 790, it's 21,790, that becomes squeeze territory. But what we're doing here is that we're getting into the volume that we've been in. I mean, since February 4th, we've been here in this 21,700 block, plus or minus 100 points. So we're getting into that now, top wick back over, and now we're still holding it 700 for a move back up to retest for the umpteenth time, at which point they'll clear it, and then it's off to the races again. So, right here. Nice content with the morning balance. Thanks, Echo. Appreciate it. I tried to play that move today, and it worked out pretty dang well. But unfortunately, they didn't give me more than like 6 minutes worth of selling. And it's becoming frustrating because usually, that imbalance move every once in a while, once a week, once every 2 weeks, plays pretty well. It treats me very well. But this week's been very, very frustrating because I'll play the imbalance move and they won't give me more than one candle, maybe 6 minutes worth of movement. Oh, and then I'm out. I get stopped out for either a loss or very mediocre profit. So I'm forced to kind of just be very, very cautious. Very cautious. Bottom wick back up. Here we go. We're flying. 790 and we're going, people. 790 and I have a very, very good day. Calling a day with no trades again. I do not like any of these charts. Nice, Damien. I love it. No, that's great. That's great, Damien. And especially this week, back and forth. So, coming back up 21,730. Pretty boring stuff. Now, what's been happening? Unfortunately, this has been the case. The past 3-4 weeks, the Wednesday 10:30 to 11:30 time slot, especially like right here during the stream, has been very slow. Like tight, tight, tight. I sound like Tuco. And then immediately right after the stream ends, big movement. Most likely that's because of the European close, and we have a breakout move. So whether it be down or up, I don't know. So keep an eye on it right here, right when we sign off at the European close time frame. But that's what we're going to be looking for. $7.90 and it blasts. It's looking like it. $7.90, baby. Give it to me. $7.30. Still going. Let's go take a look. What do we have? They are putting on liquidity up here at 800, and they're spoofing 850. So 790 is right about there, and that'll put us on a grab to 850, which will be glorious. I don't know if I'll be that fortunate today, but holy crap, that'd be amazing. They are bottom wicking it still, so the algorithms are still in our favor. Still in our favor. $7.30. $7.30. How's Hero? Let's take a look. Hero indicator right now. They are selling some puts. Very weak activity right now. They've gone from 1.6 billion down to 1 billion in puts, so they sold about 600 million. And the calls are slowly trickling up all day. They're now 1.3 billion in long delta. So they are buying calls here and selling puts temporarily. But it's the same exact price action we've been dealing with for 3 weeks. Just slow grind up every candle's bottom wick to go higher. That's it. Period. So the probability is on your side, unless you just have a super, super unfortunate entry where you just long the high of the day. The probability is in your favor to buying into supports. Now overall though, it's you just got to be patient with your entries and in your trades. But I've been having much better luck after I was trading. Yeah, so the market's been moving nicely in pre-market. That's where all the fun's been happening. And today we have to deal with slower. During the session, we have to deal with slow action. But yeah, and go back to sleep. This is typical new features. Well, is it typical? Movement is typical overnight. The issue with the movement overnight is that you have to be patient. It happens very slow. So even when it does trend to go directional, it does so in a very slow manner. So if you're wrong, or you get a, if you're looking for big profits very quickly, you're not really going to get it unless you just happen to catch like a European Open sweep candle or something like that. That happens, which is a great trade. But you've got to be able to just wait out the slower order flow on the overnight trading. The liquidity is not there, so it moves slower. So other than that, yeah, I mean, you can get some good moves on overnight trading. Whenever I do play overnight trades, usually the way I do it is a smaller position. I put on some limits at a support, and I just let the market climb or fall or just go sideways into those events and fill, and then I will hopefully wake up to some profits, because it's very difficult to catch shorts in pre-market. Very difficult. The market loves to bottom wick and go higher in pre-market. So we just had a nice red candle, of course. Instantly bottom wick, goes back up, 730, which is great. And I'm still looking for that 790. I'm still looking for that 790. We need it. How tight did I play my stop this morning? I had an 8-point stop on there. I was playing ES. And it was looking really well. I was trying to lock in a 30 to 40 point move. Obviously, that didn't happen. Bottom wick again. And this may do it. This may do it. Come on, baby. All right, here we go. Come on, baby. Another bottom wick will get us to 790. Just got to be patient. Just got to be patient. Long entry on 8 EMA touch. See what happens. Nice. Do you think the top wick on a 15-minute means anything for NQ? Well, we do have a top wick at the 10:30 time frame. Not a lot of volume on it, but it's there. But they're holding steady right on top of the volume profile node, 715, which we have supportive measures over 700. So as long as they hold 700, I would say the probability is 790. If they take out 700, then we'll cross that bridge when we come to it. But so far, everything over 700 is supportive. I see you use points instead of percentage for stop loss. Do you have any advice on the two? Yeah. I've always been of the assumption the market does not care about your money. So why would you make decisions on your trading based on money? If I'm entering a trade, hopefully I have some sort of thesis onto why I've entered the trade and what I hope to get out of the trade. I don't want to cut my legs out from under me on a potential profit simply because I like what I see already and I'm going to lock it in. Now, of course, there is a point where I will just kind of step aside from technical analysis and just let it run, but that's usually when I'm already deep inside profit. If let's say right here I short NASDAQ, and theoretically speaking, and this thing tanks to 21,000. Let's say we have a 700 point sell-off right here, and I am deep in the money. At some point, I don't care about technical analysis. I'll just put on a trailing stop and just take my hands off, and whatever happens, happens, because that's that's crazy. But in the beginning stages of a trade, which is more important, that's when you have to be technical. There's no exceptions. When you put on a trade, if you just put like a $2,000 stop loss, market doesn't care. But that market doesn't care about your $2,000. All it cares about is where liquidity is. So what I like to do is place a position, and I want to set my stop that's beyond the liquidity. So if they sweep counterproductive to my trade and they try to sweep it, I want my stop to be beyond the sweep. That way it won't stop me out, and then it just continues, and I become profitable. That's the goal. And usually it works out within about 30, 35 points of NASDAQ. Hey, another bottom wick. Oh yeah, this thing's accumulating for 790. This is like 4 bottom wicks in a row. Every single red candle is bottom wicked, which is great. 790 is our target. So, and that really has to do, there's a dance between proper entry and trailing stop. Because if you put on a proper entry, then your trailing stop beyond liquidity should be relatively close. But if you're taking early entries and you're just hoping and putting on a trailing stop, then all you're doing is giving away money. But I can never encourage trading off a P&L or a certain dollar amount, because the market doesn't care, and you're just going to set yourself up for emotional trading if you do that. Does that make sense? Great North fishing. Red candle. And also, just like we talked about yesterday, high probability trades are found in high probability environments. This is not a high probability environment. So, yeah. When did you enter NASDAQ trade? I entered my NASDAQ long about 40 minutes ago. But again, I'm careful to kind of put that on y'all, because at this point I'm testing my prop firm. I'm done with prop firms, so I'm like slinging big positions to blow the account up, and if I make good trades, I make good trades. So don't take any confidence in that. I haven't touched my personal account today. I've been trading my personal account off and on a couple weeks now, but I'm not touching my personal account today. I was going to, but yeah. That explains it very well. I need advice. Do I recognize it doesn't set up emotional trading? Get out way too soon. Yep. But it's trading is a whole package. I know we can talk about that trailing stop aspect, but it's a whole package, and you've got to tie it all together. You can't take one particular thing out of context. And it starts with position sizing. Before you even take a trade, you need to determine your confidence level in the setup, and then allocate a certain position size to it. You can't use the same position sizing for every trade, because every trade has different levels of confidence. And you certainly can't go over a certain dollar amount, because you're just going to get smoked if you do that. And you're going to treat a trade with 1% of your account a lot differently than you treat a trade using 80% of your account. It doesn't matter what the price action does. You're not going to be able to manage it the same. How do you personally identify liquidity sweeps? I identify liquidity sweeps through, let's say we're into a resistance. I'll just kind of paint a scenario. Let's say you're at a resistance and the price action is consolidating for, an hour, just not moving. Then all of a sudden, out of nowhere, you get a big green move up into a strong resistance that goes through the resistance by a number of points, let's call it 10 points, and then somewhat instantly, within 30 seconds or so, it hammers back down and top wicks the crap out of it and closes with a very engulfing top wick. Some people would call that like a hanging man candle. So that's a sweep. That is their job to get the market moving, is to get through liquidity into some resistance, stop out the shorts, get people buying long, and then when they have long buyers and closing out of shorts, they crash the market, because that's how you induce liquidity, is you have to get people willing to buy in order to drop it. It's counterproductive. Why do you think my DMs are riddled with people who have a very high tendency to buy highs and sell short on the very low of the day? Because the market is literally designed to get it looking bullish to get you to buy, and then they dump it, or get it looking super bearish and then they bounce it. It's not paranormal. It's just the market is designed to do that. We read about that in Anna Colling's book, Complete Guide to Volume Price Analysis. So liquidity sweeps are designed to, like a liquidity sweep to get the market down is designed to get you bullish. Huge green engulfing, get you bullish, get you buying, top wicket, sell it all the way back off. And then vice versa when you're looking for a bounce. Red candles. That explains it very well. Much needed advice. I do recognize that it doesn't set up for emotional trading. Yep. There you go. I'm stopped out of my NASDAQ long. Let's see what happens. Watch, they're going to go back up and look at that liquidity at 750. Short side is 0 DT, long side is 7 DT, putting them around 9:50, 10 o'clock in the morning. Ranges formed to target around 10. Nice, McGurky. Market does? Yeah, market does. Uh-oh. What we got? What we got? What do we got? Another bottom wick in the making? ES dropped off a lot more than NASDAQ. All right. Engulfing red so far. Nice. Well, you know, now that they got you conditioned to expect bottom wicks all the time, you know what that means. 100%. You're exactly right. They're going to condition you to bottom wick everything, and then they're going to smoke show it. That's how it works, baby. That's how it works. $1.4 billion in puts. We have liquidity at 750. Oh, data latency spike. Y'all know what that means. Data latency spike. Y'all know what that means. It means the exchanges are starting to get overburdened. That would be sweet. Uh-oh. Y'all hear me? Check, check, check. Did I lose data? Did I lose data? And my trading view just reset. And I just had a data latency spike, which usually means we're inbound for a move. I do have to mute. I'll be right back. All right, I'm back. 1.5 billion in some putteronis. They have removed the support at 6010. There is a phenomenal amount of exposure at 6010. It is now gone. So there you go. Just mark that. So far, bottom wicking. Nothing to get excited about yet. Huh. Powell's comments on today's CPI says that we're close, but we're not quite there yet on inflation. Didn't CPI go up today? Interesting. Did they take a course on like gaslighting? Interesting. Alrighty. We're kind of holding right here at the bottom of value on the 15-minute. So supportive measures right here. It does appear to be breaking the little trend channel here, but still nothing to get excited about because we know what's been going on here. Now, tech has kind of rolled over the names. Microsoft, Nvidia has come back down. Dow and Russell are coming down. The VIX is rocketing back up again. But I just can't get excited about any volatility because it's just one candle then reverse back up. It's just no bueno. But that's me personally. CL had a great sweep for longs. Yeah. We are coming up on the end of the stream, unfortunately. Hopefully we have some volatility today, especially at the European close. We're still holding right on the volume shelf. I'll show you a picture of exactly what I'm looking at. It's right on the shelf. It's the value area. After this, participation goes down. So that's what I'm saying. The supportive measures right here. If they clear it, maybe we'll go down to below of the day. But that's a big old if. We're still holding it, and they're still bottom wicking it like always. So remember that as we close up the stream here into the afternoon. $1.6 billion inputs and increasing. 15-minute, we have a red engulfing that closed, and a very small 15-minute candle now that's dojied out. Where did they fill that 1,000 iceberg? So they filled that sell side iceberg at 60.66, which was slightly below the high of the day. So far the iceberg worked well. We're not getting very many large icebergs nowadays. Today has been some decent ones. Thousands decent, but we haven't been seeing very many lately. So I'm happy to see that we have a nice little sell side right at that, at least close to the high. It would be nice if it led to some volatility, but not getting my hopes up. A little bit of red. Coming back off. S&P's dropping. S&P's down. 600.5. What time frame is that? That is a 15-minute. Now S&P's dropping a little bit here, slowly. Next target 599.63 if they can get down there. Thinking about long at SPY gets 599.60. There you go. Yeah, you saw it. Much. You saw it. Bottom wick so far. Very slow action. So they have a little liquidity. 60.19 would be the bottom side liquidity here. This guy was on earlier. He took him off. They've trimmed CVD a little bit, not a lot. I'd like to see the CVD heading a lot more south if we want to see a good downside move into selling. Just to see, really what I would want to see is a change in collective selling here. But other than that, no. We do have some options data that's pulling a little lower. Supportive measures about 6,6005. We have 1.7 billion in puts. We have a little liquidity down to 60.12, 60.20. But you got to wait your turn, bro. Wait your turn. Slow. So far, the best target today was the sell side and liquidity there. The iceberg. Right ahead. Is today the day? I would love a selling climax day. Get me excited for once. A little bit of red. A little bit of red. Gold's becoming reserve currency for central banks. That would be sweet. Man, talk about turning the tables. Interesting. Fed seen increasingly unlikely to cut rates this year. Yep. Is YouTube on delay? I think like 3 or 4 seconds, give or take. Sometimes more, sometimes less. Más o menos. Coming down 600.27. All right. Now, notice what's different about this downtrend as opposed to the uptrend is that we haven't had a quick sweeping red candle yet. It's just kind of inching its way lower, testing into supports, which shows a little bit of lack of buying here. Maybe a little buyer's exhaustion for this type of price action to kind of creep lower. So it's definitely sustaining. We'll see. We'll see. But XLF new low of the day. What questions y'all have going into tomorrow? Powell was asked, will you commit to scrapping the flexible average inflation target? And he says that's the framework we'll be asking ourselves, the question we'll be asking ourselves. So it looks like they're going to do away with the target inflation rate that they've been yapping about for 4 years. Bunch of jabronis. Bunch of jabronis. All right, 60.41. NASDAQ is not filling down nearly as good as ES. So NASDAQ's holding up, despite the fact that NVIDIA and Microsoft are both attacking lows of the day. But look at Apple. Apple is going nuts. That's why. Somebody posted that the Chicago White Sox have already been eliminated from the playoffs. Season hasn't even started already. I love it. I love it. If you're not a baseball fan, Chicago White Sox last year set the record for the most losses in a single season. Bottom wick. All right, y'all. There's 11:30. There's a European close, so nice little move lower off of the iceberg, sell side iceberg up top there. But other than that, all more of the same. There's dealing with a big red candle from CPI. They reclaimed about 70-80% of it. NASDAQ a little bit more. Retraced some of it, and here we are, back and forth. So they're bottom wicking this. Still, I'm not getting excited about any downside whatsoever. If it happens, it happens. If not, the probability still says play the dips, buy the bottom wicks. So Me personally, very light positioning for me until something changes. This is not charts that I like to trade, like to be involved in. A lot of crazy back and forths. Meh. There's other stuff to get excited about. So, like pizza or sandwiches. Yeah. So, anyway, hope you have a good rest of the day. Hit me up with any questions. Come over and join us in the Discord. And other than that, I'll see you bright and early tomorrow morning. I'm out. See ya.